Check. Hello.
Good morning, everyone.
Good morning.
My browser is fighting me here today. Trying to get into my Lulu trade turned out to be a Lululemon. Can I get at least? Oh my gosh!
That's a good one.
Yeah. Well, mine turned out to be a lemon too. Because why isn't my browser working?
All right. How's everybody doing this morning? Good morning.
Yeah, I'm having anyway, I can't. I don't know why I can't get into option pit for some reason.
Okay. All right. Well, good morning, everybody. Good afternoon to my friends in Europe. I am Mark Sebastian. I am your only option. And I'd like to. Oh, we're not running. Are we running yet?
Yeah.
We're live?
We are.
I know.
Say hello, everyone.
I'm not seeing it in the room, though.
Oh, yeah, I got it. Yeah, we're there. All right. Good morning, everybody. Good afternoon to my friends in Europe. I'm Mark Sebastian. I am your only option. Welcome to the Ticker Highlight Show. It is great to see everybody here. Reminder, here's what we do. Every Monday, Leisha, Andrew, Hans, who I will introduce shortly, and myself get together. We go through 4 stocks we don't like and 4 stocks we like. We then pick one trade that we think has a real chance at being a big winner. And folks, we've been on a pretty good heater here. Lululemon, not great. Obviously we wish we'd have had a better trade there, but I mean, take a look, guys. It is just racking up wins, triple-digit wins, you name it. So this is something that you should, if you're not here every week, you got to change that and make sure you have this and every state of the market on your calendar to join us, because we're delivering actionable ideas on a daily basis. Speaking of actionable ideas, this Wednesday for the Federal Reserve, this is a big one, folks. Andrew and I are going to be live reacting to the Federal Reserve starting at 1:45 Eastern Time. The Fed speaks at 2 p.m. We will guide you through what is in the announcement, what's being said, and what we expect going forward. There are some. This meeting has bigger ramifications than just what is said, what is announced by the committee. It's what is said in the statement and what is said in Powell's conference. Andrew has pointed out some very important effects that are coming out of these meetings and how markets have reacted. And if you've got to be there to get that insight. So I would invite you to make sure to add that event to your calendar and join us on Wednesday starting at 1:45. If you've not registered, we're going to drop the link here in a second. But you'll want to make sure that you're there. You're there for that. All right. So let's talk markets here. SPX, having a nice little day to start the week, up 27 points, 0.4%. Q's up 0.6%. Dow up, pretty flat, and the Russell up ever so slightly, about 0.2%. What's leading us? Tesla. Elon Musk announced he's buying $1 billion worth of Tesla. That is when the CEO and cult of personality recounter, is that what they he is when someone of that kind of ethos with that kind of a following announces they're buying more of their company, people jump on board, and you're definitely seeing the effects of that. And our good friend Google, this is a name. Boy, this is I thought it was getting to 250, but it got there real fast. It's now worth over $3 trillion. And before you say, well, it's way overpriced, that PE is still sitting at only 26. Getting to where I thought it might be. When we started talking about Google, its price earning ratio was 20. So this thing has had a massive rally. And Gemini has now jumped after just really botching the opening of Alpha AI. They've really turned things around, and Gemini is the way they've integrated that into Google and the way they've integrated that into the Office suite that they use, things like that, into YouTube. Gemini has such an advantage if they get it even remotely right over a lot of the other AI search. So Google, I think, is in prime position here. Microsoft, with their deal with ChatGPT, looks like kind of the other winner in that group. And so I'm going to start with my names. And, you heard me start leading off by talking about AI and how important it is, and how the firms that are investing and owning AI are kind of going to be the next generation, right? Look at the moves that Microsoft, Google, and NVIDIA are making. And the reason is because they're going for growth. They're going for growth. And then I look at Apple, who rather than invest $100 billion into ChatGPT, decides to buy back $100 billion of their own stock. I don't know if that's the full number, but it might be 70 billion. It might be 50 billion, but it's silly. We're in an area where the firms that are we're in a time where the firms that are getting rewarded are the companies that are investing, the companies that are making that jump, that are trying to change their businesses. And I'll tell you, I was listening to a car commercial yesterday on my drive back from Houston. And the car commercial was basically like, why would you buy a phone where they've been promising you an AI upgrade is coming soon, and it's been over a year and it's still not there? And it was pretty darn damning of what's going on at the fruit company. That technologically wise, Apple is now falling further and further behind that Android system, operating system. Now they've got a ecosystem that people really like, that's secure, but it's falling behind. And you'll notice this company hasn't done anything in a very long time. If you bought in July, you basically haven't made any money. Had a nice little run coming out of the April mess, but it's not been, you're collecting dividends. It's not going to go to zero, but it's in a new phase because they've decided to go that route. Right? Google was in that phase, right? Google's just a utility. And then they've decided to invest their way out of it. Apple has decided to double down on being a utility, and as an investment, it should be treated as such. You know, had a nice little pop here. I'm interested to see what Leisha sees in the charts on Apple. But, you know, I don't love the direction that Apple has taken from a corporate level. The other area where I think there is some weakness is in defense contracting. Lockheed has been so strong, but we've already seen Boeing start to kind of have some issues. They're kind of a quasi-defense contractor. Boeing just falling out of bed. And, you know, I'm interested, again, to see what Leisha's charts look like on this one, but I don't trust it. I don't trust it at all. And, you know, I want to kind of maybe look at, on the upside, I maybe want to look at going back to the well on Walmart. I think this thing might be heading to 110. They are doing a lot of things right. Speaking of not sitting on your laurels, right? People blasted them for investing into Walmart Plus for, you know, they're like, why bother Amazon? You can't compete with Amazon. Oh, Walmart said, yes, we can, and is. And Walmart's gain has been Target's loss. Target went the other route and said, you know what? We can't compete with Amazon. All we can do is make our own current customers happy. We can't really grow. And take a look at what's happened. They're not making anybody happy. This stock is going the way of Macy's, folks. Long-term Target investors, you need to take a real look at this one. But Walmart, I think it's going to 110. And currently, the market cap of this thing is $825 billion. This is going to be Taiwan Semiconductor is going to get there first. It already has. So we now have 9 companies worth $1 trillion. Then the next one is probably going to be Walmart. I think Walmart's going to be worth at least $1 trillion, maybe more. As a long-term buy and hold, I like it. And near-term, it looks like it's got a little bit of momentum here. So I'm looking for Walmart to potentially rally and move higher. So I like a follow-up upside play on Walmart after our really nice one from 2 weeks ago. And those are my names. So let's kick things out to the team. They are, of course, Leisha J. Leslie, our Queen of the Candles, otherwise known as the Queen. And, you know, after this weekend, heroes to us all. And then we're also joined by Andrew T. Giovinazzi, our Viking of Volatility, our Director of Education, and now speaking, our Imperial Overlord of Income. He is the starting center for the Option Pit basketball team. He is Hans J. Albrecht. Hans, what? Happy Monday. Good to see you. I hope your weekend was great. What names are you looking at?
Happy Monday, Mark. Yeah, my son actually, who's taller than me, believe it or not, is.
Oh my.
Yeah, he's working with a guy, private coaching with a guy who was in the Final Four, which is kind of cool. And he's not that expensive, which is weird. So anyway, that's kind of cool. I want to work with him, but yeah, crazy market. I mean, here we are. It is melt up mode, and I don't know what else can you say. This is changing everything. So I think the market is starting to realize that it's very difficult to even kind of value anything at this point, because the implications of what's happening in this AI inference phase are just they're just kind of a big question mark in a way. So I think that's the market getting excited about that. We'll see if it runs into a wall at some point, but for now it is gangbusters. So this is an interesting pick for me, Mark. One to love. I'm saying Upwork. Now, I called this for a short a little while ago, and I've changed my tune. And I want this to be a lesson to everybody. Don't get stuck in an idea. I did well on it. It was a great short. It got crushed. But what I love is that I think this AI, particular AI phase, and this is going to be true throughout markets in general, is that people are going to push narratives too far in one direction, right? So we kind of talked about Salesforce as well. And I think this idea that AI is kind of an easy button at the moment is overdone, right? So there's that, there are these there's a Bill Gates saying about, people overestimate the capability of things in the short run, and then they underestimate things in the longer run. So right now we're going to see things pushed in many directions. That's what's going to make things really, really fun for us as traders who have our finger on the pulse of things, is to do it. And so we see Upwork's been kind of coming back a little bit. And so if you sort of twist the way you look at it, which was originally, hey, they're going to get disrupted by AI and a lot of the things that those sorts of freelancers and gig people do, and these are people around the world who make their services available, the idea was that they're going to just be out of work immediately. And I don't think that's the case. And in fact, I would wager to say that there is going to be a higher ticket demand. So some kinds of jobs may disappear because of AI, but I think there's going to be this incredible demand because of AI, because it's not an easy button yet, because most people outside of, people who really understand coding and things like that, and putting all these pieces together to create value from AI, most people don't know how to do that, or they try on ChatGPT and they give up. I'll put my hand up there. So you can go out and get somebody to figure this stuff out for you. So I think the idea that, a company like Upwork that makes a piece of the revenue, and it's a big piece, 25% of anything people bring in, that's a company that's going to be positioned well in a stage where I think you could start to see a lot of pricing power from these people as people clamor to get on board and say, hey, listen, Mr. So-and-so in the UK or India or Bangladesh, you got to help me figure this out for my company or for my small business. And I think there's pricing power there. So you're already seeing pricing go up there, $500, $1,000, $2,000 to get things done, even simple things. And I think that's going to be really interesting for a company like that. I like them over Fiverr a little bit because they tend to be a little bit more upscale. Fiverr's a little bit more, although Fiverr's moving upscale, and I think they do okay too. I think that's an interesting play. So I'm long that thing, and I think it's got some good upside. My one to leave is McDonald's. I think they call it a Happy Meal, but I think a lot of people are grumpy lately. This stock has really gotten kind of the food's gotten very, very pricey. They're starting to kind of box out, use a basketball term. They're boxing out a lot of people who used to really be loyal to them, and they're feeling hard done by, and it's getting very expensive. $75 to feed a family of 4 or 5. Like it's getting crazy. So I'm saying that there could be a mini Mick recession upon us in McDonald's. I think the stock, I'd love to hear Alicia's take on it. I think the stock is starting to look a little so on the chart. And I think that's pretty much it. I think my last joke is I think the Hamburglar is going to start having to steal his burgers because they're getting too expensive. So back to you.
Rubble, says Hans. So there you have it. Let's kick it to our own Andrew T. Giovinazzi. He is the Director of Education, the President of Option Pit, and our Chief Volatility Trader. What are you seeing here, Andrew?
And new chicken farmer.
And new chicken farmer. Everyone's invited to his house in 3 months for an
egg.
McNugget.
Yeah, Andrew's got 6 chickens. Lauren says she's extremely jealous of your chickens.
6 chickens and a rooster. 6 chickens and a rooster. So anyway, my long picks. Okay, Lulu, my short pick. This is the hardest thing. Last week, Lulu didn't really do anything. But with option pricing, timing is everything. Right now, I want you to notice this chart of GDX. GDX gold going straight up. Straight up. The Fed's going to cut. Congress is spending money, right? Everything in here is for, I'm going to say, kind of an inflation. Inflationary, but all I do is look at the price of gold. The gold miners basically lagged regular gold for a long time. Now here is the thing, right? For gold, you have volatility is kind of cheap here when it was making its run, and now you have kind of this little new plateau. So traders are still buying calls. They're buying calls. They want to see the FOMC come out. They want to see rates lower. They want to see a picture of lower rates. down the road, and I think that's going to be bullish for gold because it has been. So I think the gold miners have been a little bit behind, and generally the miners eventually catch up to the moonshot and gold price. So again, always interested to see what Leisha has about the chart, but GDX is my long pick. Now my short pick was timely for last week. It was Oracle. Now Wednesday when I put my post out, Oracle was 340. Now it traded down to below 300. I would like to see it sit here a little bit before I go crazy on the short. Now, what I didn't understand, and maybe somebody can explain it to me, how do they get $300 billion in bookings from OpenAI or something? One company? Like how is all that supposed to work? Like where's the money?
Where's OpenAI getting all this money? They're spending like $500 billion.
So, I mean, are they really that? I guess we're going to figure it out.
That's risky for Oracle. Yeah, I agree. That's a bit risky.
Anyway, I thought it's not that. Now, here's the thing: the growth potential in AI. Hans has been talking about this for and all of the other companies that are, adjacent, right? Adjacent to AI, benefiting from the uptake. Oracle clearly is going to do that. I just thought, for a company that big, it was kind of overdoing it. And it says sky's the limit and everything is fantastic, but I think there might be a little bit of selling here in this. And again, like I said, volatility post earnings is basically the same, right? There hasn't really been a huge vol crush. So normally post earnings, you would see volatility in the mid 20s. Okay. You're seeing it now still in the 50s. Okay. So this is all, again, it was positive stuff, but I think the stock had overrun. I would like to see it sit here a little bit because I was kind of on a 3-day bender after I wrote my piece up, and now it's sitting here. But again, volatility this high, vol should be lower if the stock was going to stay here. That's all I'm saying. So both cases, again, gold works a little differently. Usually with volatility going up with a gold or gold-related stocks, because of the squeeze, that's more buying. Here after earnings, if the stock was going to stay here, my guess is that these option prices would be much lower. It's like, notice here this yellow line, 60-day volatility after earnings is in the same place. That almost never happens. So the market is still expecting Oracle to do a lot. Now, I think it's going to trade a little bit lower, but I mean, it's already off from 340, but I still think we could get a little bit lower, but I would like to see it sort of stabilize. So I'm not as shorty as I was after the stocks dropped $40 from when I wrote this. But still, I think it's going to, some of the bloom's going to come off the rose here. There you go.
Yeah, because it's future, right, Andrew? It's these RPOs. This is sort of the future revenue. Like, I'm going to make all this money over 5 years. Is that something for people to get excited about now? So I like your idea. That has room to fade a little.
A little bit. That's the idea. And option prices. Anyway, we'll take a look at it too in Rip Zone today a little bit.
All right. Let's kick it out to Pumps and Pitchforks, which is our own Queen of the Candles. Leisha J. Leslie. Leisha, what are you looking at? And then what did you think of some of our names? You're muted.
The dogs were barking earlier. Hi, everyone. I wrote about Ethereum. It is pulling back here. There is support down here, though. I probably wouldn't get in today. I'd wait to see that bounce. I think it wants to trade back up to 49.19. I would say let's wait on that one. My short was PayPal.
Why did that company stink so bad? It does.
I like PayPal below my median line here, 68. It's It's got some, the 21-day above there has some resistance. Not sure it's not my favorite. It's not my favorite right now. I think there were a couple better ideas out there.
Okay.
But
I do see what you're saying in terms of PayPal, though. That's one where if maybe I see some big put buying, I would be jumping in. Want a little confirmation on that, but we see somebody buy 25,000 puts, I'll be on board with that.
Or the opposite, you see it pop up over this median line, and you see a call buyer. This bullish, piercing could be taking effect, and it could be rallying. So, either way, it's at a pivot point here at the median line, so it could go either way. So I would pass on that one also. I do like Walmart higher, Mark. I think you're right. There will be resistance at 105.38 here, that previous high. But yeah, above there, that's a pretty steep pitchfork. It's traded the median line here before. I think 110, 107 for sure. 110 could be in the cards. There will be some resistance at this previous high. Apple was your short, Mark?
Yeah.
I would wait on Apple till below 234.87. You see it start to trade below there, then yeah. And then you can go down to like 225, 227. But I would like to see a close below 234.87 first.
Okay.
Walmart,
Upwork.
Apple, what is it? Upwork?
Yeah.
I agree with you, Hans. I think this is a very nice bullish chart, but there was some headway. Each time it reached 17 3/4, it rolled over.
So we need to see a break over that.
Which on this cheap stock, though, that 3/4 of a move is, you could still double on some little cheapy options, right?
Good. Yeah.
You could double on some little 50-cent options probably. I agree, though, that that chart looks pretty bullish. McDonald's, you're right. Hans, McDonald's, whoops, I keep doing that. Does look ugly. Today it's flirting with the 200-day. I'd like to see it really trade below there because it might try to hold. The 200-day is a pretty important moving average to add support, but below there, 292, I have support. Or maybe even right here. I might.
Restaurants look terrible overall. Like
Right.
look at all the restaurant stocks. There isn't one
I'd
that
say 294. Yeah. Yeah. But this 200-day might give us a little problem with, you know what I mean?
Mm-hmm.
It could wallow there. It could pause, which we don't want to see when we're buying options. But below, a close below that 200-day, for sure, it's going lower. Quite a bit lower. Andrew, I like gold. You're right. Gold, and with the rate cuts and all, it's going to keep going. I believe you're right on gold.
I
That's
don't
my
see
gold
what's there to
futures.
stop it.
Whoops. Can't type today.
Must have been the weekend.
GDX. I like GDX. Up here 73, Andrew. 73.
It kind of blew me away, like how powerful the move was. It's just and there has been enormous call buying in gold, like crazy numbers. It's like the Russians and the Chinese are buying options in the U.S.
As far as our longs go, that's my favorite. Now it's an RSI. It is in overbought territory, but as we can see, it can last up there as long as it wants, right? Longer than your account will last, as they say. The bearish signal with RSI is when it rolls back and goes down below 70. That's the bearish signal. So yeah, I think you could get at least a $2, even $3 move in GDX here in the next week or two, for sure. Oracle, it looks like it might be trying to close the gap, but today's bullishness, I would hold off.
Yeah, I know.
I would wait on this one. You see it start to trade below that low, which isn't far from my median line, like 289. Then, yeah, you're going to get some action closing that gap. Today's bullishness, that makes me pause.
Yep, I agree. Like if they like the AI again, I don't want to short it. There's no.
So the top two, I would say GDX and Walmart. And UPWK, I think is going up higher too. It has a little headway though at 17.75.
Yeah, I think I like that one at 18 before we
Yeah.
jump in. Like, let's see it actually break out.
Yeah, and I don't have room to run then.
Yeah, and the nice thing I like about Walmart, one of the nice things about when you trade Walmart is the
Options.
volatility is 19.5%.
Yeah.
Now, volatility, you heard Andrew talk about it. That's just another word for option prices. That is that number tells us how expensive or cheap is it to buy an option. And so when Andrew was talking about Oracle and that vol of 50, he was saying option prices in Oracle have remained really high post earnings. They would normally drop a lot, and they have not. Walmart, on the other hand, post earnings, the option pricing has gone right back to whence it came, and is sitting at the lows we haven't been about as cheap as we are since November of last year. So can it go lower? Yeah, but it is for the range the VIX has been trading in at its lows. And so what that means for us is we can look at something like October 3rd, and the 105 calls are $1.30. So if we get to Leisha's, even her first resistance point up at 105.38, those calls will be worth probably 100%, minimum, 75, 80%. Because the option pricing is cheap. And, when the option pricing is cheap and the underlying moves in your direction, it is much easier to make money. And thus, I want to go with the Walmart October 3rd 105 calls. They cost me less than $1.30, targeting at least $2 out of those. So that would be a minimum 50%. And, if we get like a nice little pop to that 105 in the next day or two, we'll make 100% on these. So I'm going to drop this trade in here.
I would say you don't have to just trade what we trade. All those other great ideas, they're great ideas.
I
right?
agree.
You'll make
Yes.
some money if you buy calls in Upwork right now. You'll make some money. You may not make 100%, but you probably do 50 to 80%. McDonald's, keep your eye on it below the 200-day. You'll make money there. They're all really good ideas.
All
Those
right.
of you that
And
trade on your own.
yes.
So, Mark, you're buying the Walmart October 3rd 105 calls for around what? A little less than 130?
I want to pay less than
128?
130.
Okay.
Exactly.
All right.
And I'm adding it to the portfolio right now. Everyone's going to be able to see it. And let me make myself the author. And so we've added it to the portfolio. For those of you asking, where is the trade? You can see the market free portfolio. And now we don't update these dynamically. So we don't send an alert out, but when I close these calls, I will, if you look below, you can actually see, I'll add this to the announcements. But you can see there's the post right there with the trade, and it's right below where you're watching us. And below that, you'll see that I do announce when I'm closing my options. In the announcements, but we don't send you out an alert. You don't get an email or a push or a text from us. That is something we do within our paid services. But just follow along. If you check here during the if you come to the State of the Market show every day, you'll see the alert below when we're selling. So that's even more motivation for you traders to not miss our State of the Market show. The next one will be tomorrow. That's Tuesday, September 16th at 10 a.m. Eastern time. And folks, that is our ticker highlight show. So make sure to join one more time. Make sure to click the link and join me and Andrew on Wednesday starting at 1:45 for our reaction and action toward the for the Federal Reserve, where we'll break everything down so you understand it. And yeah, make sure you join us. So for Leisha J. Leslie, our Queen of the Candles, the pump-wearing pitchfork thrower, and Andrew T. Giovinazzi, our Viking of Volatility, and of course, Hans Albrecht, our Director of Income Trading. I am Mark Sebastian. I am your only option. Make sure to be right back here at 10 a.m. tomorrow. Have a good one, everybody.